What are you making of the dynamics, the twists and turns of equities there in India right now?
Sure. Hi. Basically there is the earnings season going on, and right now, I would say from Nifty 50, which is the major index we track, almost 55% of the companies have declared their result, except for Axis Bank, which reported a one-time loss. Companies are showing results which are double-digit profit growth. Earnings were subdued till I would say the September quarter or almost till the December quarter. That seems to be turning around. A lot of the negative effects of high raw material costs is easing off now. So one thing that's driving the market is the earnings. Secondly, the macro fundamentals are heading in the right direction, whether it is the economic growth, the inflation coming under RBI's comfort zone with the latest number at 5.66%. RBI is okay with anything less than 6%. The bond yields have been correcting from a peak of 7.45 to 7.2% levels. So your domestic macros, your corporate earnings, valuations are pretty reasonable. If I look at the 1 year forward PE at an 18,000 Nifty level, the earnings next year is expected to be around 940 earnings per Nifty. So you're trading at a 19 PE, which is very similar to your long-term average. So reasonable valuations are something that are supporting your market. On the other hand, you also have your liquidity, which is going pretty strong with
Shweta?
domestic inflows strong. So all this is, driving.
Sorry to interrupt you, Shweta. Just to get a quick couple of specific questions in, how concerned are you about the weakness we've seen in consumer demand as reported by many of the consumer goods companies so far, and whether that will prolong? And a quick question on your take on Adani stocks, given that the regulatory sword now extends out to the next 6 months, but seems a little bit diluted. So the focus goes back to earnings and fundamentals?
Absolutely. Coming to your point on Adani, I would say, there is a judicial and regulatory inquiry going on, and that's going to take its own time. I wouldn't have a, comment or view on that because, we're all seeing how it's pacing out. However, I would say that the impact of Adani on markets, we don't see a rippling effect on other stocks. It's not that, there's a specific issue with the company which would ripple out to would not really be impacted by how Adani is playing out, whether it is your large cap index or the mid cap index. Secondly, on your question of consumer demand slowing down, so yes, consumption has taken a hit over the last few months. However, what we are reading is that at this point of time, monsoon is expected to be normal, so your rural consumption is expected to bounce back. Even in terms of consumer spending, the trend that we are seeing in the last 1-2 months, whether it is your auto sales, seem to be gradually picking up. So it's expected to improve in the coming months.
Shweta, all things considered, which sectors can still deliver alpha for your clients?
Super. So, if I have to list down 3 sectors, I would say auto, capital goods, and banks. These are 3 sectors which are showing earnings potential upwards of 50%. So, if I just look at banks, they're showing not major NPA concerns, infrastructure spending going up, so capital goods, auto cycle is turning around, and, these would be the top 3 sector picks.
A quick last question, Shweta. How are you looking at the infrastructure build out in India, and what are the companies to bet on to make the most of the new roads, highways, ports, airports being built out?
Absolutely. So, like I said, the government spending on infrastructure is going up, and we are seeing order books improving. So, a lot of your companies, like L&T, we are seeing the order book gradually improving. I'd say this is likely to pay out, but when I say infrastructure, it's not just the capital good companies. You also have cements, paints which have been beaten down, a lot of your, steel companies. So those are likely to play out more. And these are companies which have beaten down, so trading at very attractive valuations. So infrastructure as a whole, you'll have a few from the capital goods, steel, cement. These would be the companies, sectors.